All right, so it seems like things are starting to get a little bit more spicy here. That this sell-off that we've had, sell-off is has been limited to the Nasdaq 100. It appears to be kind of cropping up in some other areas. So I'm going to show what signs we're seeing now from the Russell 2000 that might be corroborating the weakness that we've seen so far already in the Nasdaq 100, and will that eventually bleed over into the broader market, the S&P 500, which is the broad market. It's technically the large cap stocks, but we'll see if it bleeds over in the S&P 500. So we're going to talk about all of that from a technical perspective. All this weakness we're getting. Is this the intermediate pullback? Is it a bad thing? I hope you know by now, if you've been watching my videos for as long, that intermediate pullbacks are not a bad thing. A lot of you probably don't remember what happened last September and October. That was 2 months of weakness that we have largely forgotten because we've gone up to new highs, easily new highs since then. So exhales are not a bad thing. But when we are in them, then it appears that markets are in turmoil and people go crazy. So we're going to talk about that today. We're also going to talk about a stock that's on its own little bearish move, kind of mimicking what we're seeing in some of these larger indexes, and talk about how we might trade that ahead of an earnings announcement coming out here next week. So let's go ahead and get started. Today is Wednesday, March the 24th, 2021. This is the market outlook from marketscholars.com. My name is David Settle. All right, well, let's go ahead and start off taking a look at the S&P 500 first with the market forecast indicator. Pretty significantly bearish short-term sentiment. You can see another extreme low point on the momentum line here. This is the second one that we've had. We had a pretty significant low there. The near-term line on that day, though, the near-term line was actually up here on that day. It did follow down into the reversals on the next day. It was the first time, really the first significant downturn since this intermediate rally started. But this is the worst day from a short-term sentiment standpoint that we've had since this started. So again, kind of like, when you're looking at here, you can see this was a pretty significantly bearish day excuse me, on this day right here. But that wasn't an intermediate pullback, right? That was as close to one as we could have without actually being one, because we never did get dark pink shading or a red line there. And then you can see this was the worst short-term sentiment that we had on that rally, during that intermediate run by the time that we finished. And then we did have an intermediate pullback here, about as weak as one as we can get, while actually still being qualifying as an intermediate pullback. And then now you can see not really too significantly bad. When you look at the blue and the red lines together, nothing really major until we get over here and we start to get some, but not in conjunction with each other until today. Today is kind of the worst day from a short-term sentiment standpoint. Now, we're still in the middle between 0 and 23%, so it's not like we're falling off a cliff here. We do have light pink shading. The intermediate line dropped below 80. The market sentiment line is already falling. So if we do fall back below 8, the market sentiment line, that will be bearish. We already have a red line. We're below the moving average. We're not below it by very much. So again, we're not flirting with an intermediate pullback here yet on the S&P 500. But it is falling. The Nasdaq, on the other hand, you can see it has rolled over. It came down from that 23% retracement again after failing to get above it. We hit the moving average again. We're back to dark pink shading in the red line again, and you can see the near-term line giving us a bearish near-term high point here, lower high, and potentially now a new lower low point with an extremely low momentum line. And then here's the kicker, right? That's kind of expected. We knew that the Nasdaq's been weaker and it's already in pullback mode, right? Well, what hasn't been expected is the Russell 2000. It's been the strongest one, but it's been really struggling. And you can see today, not only yesterday did it break through the moving average by a significant amount, today it followed up on that with breaking through the 23% line. And we are well below that moving average now. And we are, with short-term sentiment as bearish as it's been during this whole intermediate rally, that pretty much the only other time was this little pullback there. That turned into a pretty decently bullish buying opportunity. But now we're getting that again here, and we're breaking that 23% retracement. We are in pullback mode, pretty much, right? We still don't have the dark pink shading to go along with the red line, but you can see, barring a significant bounce back up tomorrow, we're probably headed that direction right now. If you take a look here at like some of these other indicators, like for example the RSI and the CCI, you can see, you know, we are breaking below 40. We are breaking below negative 100. Now we've broken below negative 100 before. Negative 200, we've broken below that even, or got really darn close to it. But this is the first time we're also breaking below 40 on the RSI. So, from a market forecast perspective, it seems like we are slowly gravitating towards what was pretty much only a NASDAQ 100 issue to now a small cap issue. And that's the big one because that's the one that's been the biggest bullish mover out of all of them. But we're still not so broad that the S&P is pulled back too. You can see the Dow Jones is also well above. It's actually still above its moving average and easily above the 23% retracement. So and short-term sentiment's down, but not extremely down. So these industrial areas still pretty much holding up pretty well. So you can see what's still holding up, but it's starting to broaden out a little bit from here to here, and you know the expectation then would be that it's going to broaden out to now here, considering we already have the red line, might take and the strong bearish short-term sentiment here. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching this there on YouTube. That will notify you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us that you liked our videos today, and it tells us that you want us to do another video again tomorrow. Quick way to give us feedback. If you don't like our videos, you don't have to click on anything, of course. But if you do like our videos and you want us to do another one tomorrow, let us know. And you can do that really quick with one click right now, even while you're watching the video right now. Just click that thumbs up icon. Comment on our video. Scroll down to the very bottom. Comment on anything that stood out to you today. What questions or comments do you have? Subscribe to our website at marketscholars.com. There's a link popping out there in the top right corner of your screen. Click on that link to subscribe to our site for free. Among other things, you get access to our Market Outlook forum on our website, so you can be able to interact with other viewers of these videos and other market scholars. Follow me on Twitter for more content in between the videos from day to day. There's my handle up there, at DavidSettle42. And join our Market Outlook Facebook group that we've created. If you're watching our video here on our blog, scroll down here, look at our class. These are our classes that we have coming up, our Q&A sessions, which is a class Q&A for our premium subscribers. We have Brandon's tomorrow, mine's on Saturday mornings. All of our trading rooms are there. You can see there. You can view more of them by clicking on this link or just coming up here and clicking on trading rooms. There's all the archives as well as the class forums. These are also available for all of our premium subscribers. Our plus, all of our paid subscribers, whether you're a premium or a monthly, get access to all of our trading rooms, as well as the Market Outlook live video. So every day I do the Market Outlook, I do a live video, 3:30 Eastern time. So I put on today's trade idea before the market closes. So it's a benefit of being able to watch this earlier. We also review all the trades that we're still in from other Market Outlook videos that we talked about. So that's a benefit you get here. Whereas other people might tell you buy this and buy that and sell this and sell that, we actually teach you how to trade by putting on the trade in the video like this, and then we continue to trade it. We position size, we manage our risk, and we continue to trade it until we close the position, and we do that here in these videos. Come down here to the bottom, click on this heart, it opens up a new tab. Hit that like button right there, and then come over here, hit this thumbs up icon, opens up another new tab. Come down here and hit that like button. Again, the more you do that, the more engagements these Market Outlook posts have, the more people will actually see our posts. The more of our followers that actually follow our accounts will see our posts, because that's how their algorithms work, Twitter and Facebook. It benefits you too, because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us here. All right, let's get back to the charts and let's take a look at the long-term chart, so the weekly chart, and look at the starting to get a little bit of a transition candle here on the S&P 500 on the Hakinyashi. Again, you can see how easily we are between the 0 and 23% line. Remember, the NASDAQ 100 is also kind of a transition mode, but after bearish candles. So we'll see if that turns into another bearish candle or two there. If you take a look at the Russell, though, we were in a bullish candle. We've gone straight to bearish candle. Like, that's not very much of a transition, and you can see the PPO is already really high and starting to roll over in the long lower shadow. So you can kind of see how things are reversing a little bit for us on a long-term basis on a lot of these indexes. If you take a look at the 3 green arrow chart for the S&P 500, we got 2 red arrows. You can't really tell up here, so let me fix this here really quick. There we go. And I'm on a logs. I'm on a here. Let me switch that scale to. Sorry. So we'll switch this to a log scale. All right. So if you take a look, I mean, we have 2 red arrows on the MACD and the moving average. We're close to a red arrow on the stochastics. Got to get below that 75th percentile. If you look at the 2-line versions, you can see we were below the 17-day moving average yesterday, and we continued down today through the 30. So relatively bearish pattern there. The 8-day is still above the 17-day, even though they're both falling. Which makes the MACD positive, so it hasn't crossed below 0 yet. It is coming down from a lower high, mind you, corresponding to a higher high in the index. So a little bit of a divergence there. And then you can see that both the MACD and the stochastics are below their moving averages and rolling over. I mentioned to you the RSI and the CCI getting to relatively bearish levels on the Russell. Here it is on the S&P, still at neutral levels, right? So we're still not necessarily seeing that pullback mode yet. We did on the Russell, but look at the NASDAQ. NASDAQ rolling over from 50 and from 100 and rolling back down towards the lower 40s. You look at the directional movement index for SPY, and you can see how the positive index is really dropping pretty sharply below 20. If you look at the IWM, the Russell 2000, now we have our breakout, right? We have our breakout, our negative breakout where the negative line's really taken off, the positive line's falling below to the slowest level below 20 since the rally started. Highest, almost the highest for the negative index. We had such a bullish run here, and now our ADX got so small here during this kind of sideways action, a lot of volatility. Now it appears that we're going to be moving up with this move, and you can see that's what we're getting on the Qs, right? The Qs, the ADX is already above 25 in bearish mode. We had come down to 25 on the positive, up to 20 on the negative, up to 20 on the positive, and it appears we're making that next leg lower on the QQQ to the downside. So a lot of these indexes are showing the potential. Remember, IWM has got the worst margin of safety. If it breaks this line at this 23% level, and it pretty much is, and that's where this one little volume node is, there's not a whole lot of volume all the way down to this 78% retracement level down to 162. There'll be some support in this area here, this 38% line from the long-term run, the 62% line from this current intermediate run, but there's not a lot of volume there either. So that's why the Russell's got more to drop than say the Qs, which have a lot of volume down below here. I mean, it could drop down to this 38% to this 62% line, the bottom of this intermediate runs retracement zone, and the 23% line of the longer term run. These multiple highs in this area and a pretty decent size volume node in that area too. So not as much downside for the Qs, not nearly as much as there is for IWM because of how much IWM has gone parabolic here and how much it can come right back down because of how fast it moved up. All right, now let's take a look at what's going on an intraday basis here, and you can see what we look like at the very end of the day. Look at that really bearish close, closing below not closing below last Friday's low point, that low there, which should be last week's low point. But we are getting below the point of control on this 4-week chart. That's on SPY. Let's look at IWM, and you can see we are close to getting a new low tag, which would put the low tag back on the right of the high tag. So again, I've shown you this before. It's the Arun indicator that kind of measures these things. Remember, QQQ has already had this bearish run, right? This bearish move that with the green line down, which means the high is still over here and the low is moving down. Looks like the Qs are still okay for that bearish pattern. The SPY is looking like we could get a change as well. We're a little bit off of its low, so not as nearly as close as IWM, which is a lot closer for this red line to pop back up here and the green line to start working its way back down, because it doesn't look like we'll get a new high tag anytime soon. And then again, the new low tag, if we get a new low tag, would put this red line up above the green. So needless to say, that's a pretty significant that would be a pretty significant change in that short-term pattern. You can see the gap filling in today. We gapped up, filled into the downside. You just really prefer not to gap up. You prefer to gap down because then you can bounce up. But all of these, even the NASDAQ actually opened at its high point and worked its way all the way down. Here's what that gap chart looks like. Let's see, do I have it up? No, I have to. Let me pull this. Oh, there it is. Yeah, there it is right here. So here's the gap chart, and you can see the moves are getting bigger to the downside for the Russell 2000. 3% declines, another 2% decline today. The historical volatility has been ramping up here. The blue line has been ramping up, has been getting more of a move to the upside. Not so much on SPY yet, but it's a slow ramp up here. Starting to get a little bit more, but nothing too significant. CB actually gapped up here today. And then, of course, QQQ has already been in a bearish mode for a little bit longer, so it's already been getting plenty of up and down moves. So bigger moves both to the upside and to the downside. And the historical volatility is already higher than the implied. But the implied is looking like it's starting to make a run, right? You can see today's finishing at the high of the day today, finishing at yesterday's high point on a relative basis as well, finishing at a higher level. Still very low, still easily in bullish territory here. So people aren't going crazy, at least on the S&P 500. But you can see how that risk aversion or exhale, risk off is starting to move more than into other areas beyond just the NASDAQ, into the Russell, which again doesn't have a lot to do with the S&P, and that's what the VIX measures. So it looks like the S&P is still kind of the last vestige of bullishness left, of mature bullishness left before we get a little bit more of a decline. And today's volume wasn't too significant, actually. You can see just barely above average, and then the range today was 5.25 points. That's barely above average. I mean, that's actually below average. So if you thought today was bad, it wasn't. Not for the S&P. So if we are going to get an exhale, then just be aware that it's going to be worse than what today was. If you thought today was really bad, then that means you probably got too much at risk, because today really wasn't that bad. It's actually just noise. On most of these indexes, it's still just noise. You can see, like I said, on the Russell 2000 here, we are breaking on the Russell index itself. We are breaking below that. But otherwise, for the S&P, it's still just noise. So, if we're struggling, then we're over risked to the downside. Again, that's something we talk about all the time in our class portfolios. And in our class portfolio today, what we do in our different trading rooms, we were actually up quite a bit today. So again, it doesn't mean, like I said, if you were down quite a bit in a noisy day like today, between 0 and 23%, then that means we're too one-sided. We have too much at risk, and like I said, more of what today. If we're going to get an exhale, a real exhale, we're going to get more of what we had today, but to a greater degree. I mean, not that we're going to fall off a cliff, because we're not, but it's going to be more selling than what we even saw today. All right, so to summarize the technical outlook, we are obviously still pretty noisy from an S&P perspective, as I just mentioned. We are already in pullback mode on the NASDAQ 100 and seem to be bouncing down from a bearish high point on the NASDAQ. And we are just starting, and we're still not all the way there, but we're getting more signs that the intermediate pullback is starting on the Russell 2000. So you'd expect eventually it would make its way to the S&P, but it's not quite there yet. And we can kind of get an idea of what bearishness will look like. And we've talked about before that when a bearish intermediate pullback starts, it might last a couple of months, because we've had two significantly long intermediate runs to the upside, 5-month long, both of them, since that last March low point, the COVID low point, with only a 2-month intermediate pullback in between last September and October, that really didn't exhale very much. We didn't drop very much. We barely got below the 23% level of the prior intermediate run. So, which means there's a pretty decent chance that we could get a little bit more of an exhale this time than we did last time. I'll talk more about that here in a minute when we take a look at what bonds are doing. But what do you think? Do you agree with that? Do you disagree? Let me know in the comment section below, especially if you disagree. Let me know why either you're a lot more bullish than I am or a lot more bearish than I am. What charts or indicators are you looking at that make you that way? All right, so in Monday's Market Outlook video, I talked to you about this kind of combination of strong QQQ and a strong move higher in long-term bonds, which is kind of rare for that combination to happen, and the IWM to be bearish along with gold. Well, that has changed now. Now the Qs are finally dropping and are negative for the week. This is the week so far this week. IWM is down 6.5% this week. Remember, it had the most to lose, and it is losing it pretty sharply here. Emerging markets are also down 4% with commodity prices kind of lagging. Commodities did jump up a little bit here today with the rise in crude oil. We'll talk about that here in just a minute. But emerging markets are struggling. Developed markets are struggling. The S&P is actually holding up really nicely. The Qs have pulled back towards the S&P, but long-term bonds are really kind of taken off. And if you take a look at the market forecast chart for the long-term bond index, you can see, I mean, we had gone parabolic to the downside, and now we're moving back up from a directional movement index. This is the parabolic move, the downside parabolic move, and it appears that we are now going to do some kind of Fibonacci retracement, right? Depending upon how you draw these lines. Here, let's draw a new line that's on a more of a bearish level. But if I were to come down to the bearish move here, you can see this 23% line and then the 38% level here, about how far we might get up to before we meet some resistance. I mean, this is just an oversold technical bounce on long-term bonds. There's a very good chance we might eventually, on terms of an intermediate exhale, get all the way back up in this 157 area. That wouldn't change things, right? It wouldn't change. It would just be the idea that we've been in this really strong parabolic bond move to the downside, and we're just going to get an oversold technical bounce. Nothing more than that. Here's commodities. You can see commodities had broken down too in the last few days, yesterday especially, and today we rallied back up to the moving average. But remember, the ADX is still high and we're pink now, so I expect that this is probably a short-lived move on commodities, and expect it to follow suit with what we're seeing in the yields, right? So there's yields as well as gold. You can see gold is kind of hitting moving average and some Fibonacci resistance and still maintaining its strong bearish trend that it's on right now. A lot of that has to do with the US dollar, which is still bullish, right? We had another overbought cluster today, or oversold cluster today, and that's the current one we're on right now that's just barely started. But there's the one that finished today, so we're still moving lower on the euro, so that means we're moving higher on the dollar. And I still think there's still, that this is the area right here that we're going to be headed towards before we finally meet up with some resistance on any kind of intermediate pullback. Now, there's going to be ups and downs, right? It's not going to be down, 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 up, 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 right? That's not how things work. I know that's how the media seems to paint it to look like, but that's not how the markets work, right? You can see during this downward move, there's been lots of upward moves. Remember, the biggest upward moves occur below moving average, at least on equities, below moving averages. So there's lots of, there's some downside left, but remember, any upside moves you get won't necessarily end it, right? There's still more downside potential, even if we are in an intermediate exhale for multiple months here, that we can just go up and down for multiple months in this lower area between. I don't think we'll get too much below the 78% level on this intermediate run, or this 38% line on that long-term run, since off the COVID low point. I don't think we'll get too far below these levels. Maybe touching that 1700 area, maybe, especially on like an intraday basis. But I expect that we'll kind of go up and down between this long-term 23 and 38% level over the next month or two. assuming that we are starting this kind of intermediate exhale. All right, when you look at how the sectors are performing this week, you can see it's kind of a little bit of a bloodbath for some areas, right? Not so bad. When you can put it in context, it's not too bad. Technology, again, started off strong. It's finally down for the week, just barely, though. Utilities that started the week weak, but then now are the best performing sector for the week, along with consumer staples holding up very nicely. You can see real estate also slightly positive, just barely. But everything else to the downside, discretionary communication services, those are your big QQQ type names, they're down. Financials are down. Industrials are down. Energy was down pretty sharply, had a really good day today, but is pretty much down along with industrials and materials. So, like, again, those are the areas that had the most to lose, right? If you were to come off of this September 24th of last year, that low point, when the Russell started its intermediate rally that we're just barely ending, they had the energy got up to above 75%, 77%, and just a matter of like 6 months. Financials were up 50%. Industrials and materials were up 25%. The broad market was only up barely above 20, but still a pretty high number. And you can see everything was up. So, they had the most to lose, and they're losing the most right now. And that's not surprising. And some of these QQQ names, communication services was the biggest performer among these QQQ names. It's losing the most right now. So, and then you can see these areas, utilities and real estate staples, didn't go up very much. They're not going to go down as much to the downside. They don't have as much to lose. And when you look at it from this perspective, when you look at all of their market forecast charts, we got a lot of pink, right? Some dark pink shading and red lines with XLK, light pink shading with a red line with XLY. Communication services has more to lose. There's your energy, materials, industrials, financials. They're all still light pink shading with green lines. A little bit of a yellow line there on energy. And then staples and real estate and utilities are actually better. They look pretty good. Dark green shading and green lines with those. And then you can see XLV kind of flat in the middle. So you can see where the underperformance can come from in these cyclical areas, and where the outperformance will also come from these safe haven areas as we continue our rotation. This is that rotation I talked to you about. Here's small cap and value moving down to the left, and large cap and growth moving up to the right. So this is the chart. This is the best quadrant to be in, the leading quadrant. This is the worst one to be in, lagging. So you can see the rotation that's coming up here. And here's the rotation from a sector standpoint. You have the energy, financials, industrials, materials all moving down to the left, and you have real estate, utilities, and staples, the only ones in the green, right? Nothing's in the red yet, but you can see where those are headed, right? These are headed in that direction, these cyclical areas, and you have these QQQ type names that are showing some momentum, but not not above 100 on the relative strength, and XLC is kind of mired there with relative strength, but no momentum one way or the other. So those two are going to be stuck in neutral, and you can see that's going to benefit them from a relative strength standpoint, as it's really showing a really nice pattern here, like getting above 60 on the RSI for the first time in a long time. The MACD is positive for the first time in a long time. The CCI has gotten above 150 for the first time in a long time. The long-term PPO is almost about to cross above its moving average too, for the first time in a long time. And we're obviously well above the 30-day moving average here for the first time in a long time. So relative strength on QQQ has really starting to show against IWM. And I've told you this a lot, and especially in my classes too, that when this does turn around, it won't turn around in the bullish market. It will turn around mostly in a bearish market, while these cyclical sectors work their way down to the left, and those QQQ type names just basically get stuck in neutral because they have less to drop, as I showed you before. And that brings us to our trade idea of the day. So let me pull up the charts again. And I'm taking a look at Lulu today, Lululemon. So here, let me pull up the market forecast for Lululemon. You can see that it looks very much like the NASDAQ 100. We got up to, in this case, to the 38% retracement level of this drop that it's had, and it's also the moving average, 30-day moving average. We failed there with a long upper shadow yesterday, and really multiple engulfing multiple days worth of bodies, 2 days worth of bodies here with today's move. Short term, the near term line coming down from a bearish high point that had been diverging. It's rolling over to the downside. We are rolling back down below the 8 and 17 day moving averages. The MACD did not clear zero. The histogram's rolling back down. You can see the stochastic slowing down as well. The DMI for Lulu has been on a strong bearish move. It looks like it's making a new bearish leg right now. You look at its RSI and its CCI, and you can see it was unable to get to bullish levels, rolling down from bearish high points for those indicators. Look at its trend strength indicator. It had a strong bearish move, and just like it did over here when it kind of got above that blue line, and now working its way back down below the blue line, easily below the cloud. So it looks like it could start a new bearish leg. It's like we don't get nice long bearish moves like we do bullish trends. They tend to be truncated and interrupted in between here when we have our move back up to the upside and then a new leg lower to the downside. And we'll see if that ends up being the case here. As you can see, the other reason why it's failing at that 30-day moving average is also its 1 year point of control. So it's very significant resistance here, and then very, very little support below that. So very easy for it to fall back down below this 23% line and make a new leg to the downside. So especially with earnings coming up next week, it sets us up for an opportunity to make a little bit of a speculative trade on that earnings. Very low risk, so we'll sell the 270 put, buy the 275 put. It's a very low risk trade. It sets us up for, and it's also a low probability trade. But if the earnings blows up and the stock takes off to the upside, the most we can lose is half our normal position, because that's what we position size here. But if it does take off to the downside, where there's, again, very little volume down here to keep it up. So if it breaks down, then we get, for the worst case scenario, we get a 5-to-1 reward to risk ratio. Best case scenario, I get out with a couple $100 loss. If it does take off, say, to 350, then, or 345, if I can get out with a couple $100 of loss, and I've got about a 10-to-1 reward to risk ratio to the downside. The other thing too that's standing out, that's setting it up for that type of move, is its long-term chart. Having been in this golden cross for so long, it appears that we have been kind of declining towards this level, and now we've had these bearish candles. We had a couple neutral candles like we did here, and setting up again for a breakdown below the 200-day moving average. So here's the regular candle. We got below the 200-day. We're retesting the 200-day right now in the 50, and we'll see if we break down into a death cross here. As you can see, we're that close to a death cross on the 50 and 200-day moving averages. All right, you've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. Again, remember, all of our free subscribers, all of our paid and free subscribers have access to that forum. So let's keep this conversation going in there. Reply to anybody else's thread. Open up any threads yourselves with any new questions you have. Again, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon on the video, as well as like our posts on Twitter and Facebook too. And then comment on the videos. Have a great rest of your Wednesday night, everybody, and we'll see you all next time.